Good morning, everyone, and welcome to this webinar, yet another ride on the COVID-19 merry-go-round. My name is Steve Richardson. I'm going to be moderating today and also managing your questions and just making sure that hopefully everything goes smoothly. My co-director, Steve Price, will be presenting. So a little bit of housekeeping. So you can select your audio settings just to make sure you're getting a good sound right at the bottom left of your screen. By default, you'll be on mute, that's that. You can leave the meeting if need be by clicking on the bottom right-hand leave meeting, the red leave meeting at the bottom of the screen. And then you can rejoin us using the link that you've used in the first place. And Q&A is very important, right in the middle at the bottom. There's a Q&A box, and you can submit your questions via there, and we'll be addressing those at the end of the webinar. So, Steve, today's panelist, over to you.
Okay, thanks very much, Steve, and thanks everybody for making the time to listen and to come into our webinar this morning. So as you know, our core purpose, Inspire, is all centred around making a positive impact. So in light of the most recent announcements from the Chancellor last week, we thought we'd try and cover the main points that may be applicable to our business clients and break down the information for you. So the agenda that we want to cover with you today is as follows. We're going to talk a little bit about why we're putting this on, what we want you to hopefully get from this webinar, what assistance is available in the Chancellor's Winter Economy Plan that was announced last week, the other key initiatives that are still available to you. Let's not forget those. There are other things still available that were available before last week's announcements. What your key considerations might be, so we want to discuss some of your options and what perhaps you might want to be thinking about going forward and how we can help and what support we can offer you. And then obviously, as Steve's already said, we'll have this Q&A session at the end. So feel free to log any questions you've got as we're going through into the Q&A section, and we'll pick those up at the end. Okay, let's get started. So why have we put this webinar on? Well, ultimately, we want to provide an update on what the key government initiatives are, and our style is to do this in bite-sized chunks. So to break it down rather than the sometimes cumbersome way in which HMRC can do it, into bite-sized chunks, so that we can perhaps all understand and make the most of the information. We want to try and then go a little bit further than that and give you some context for these initiatives. I think it's largely employers who will be on this webinar with us today. So how do these fit around you as an employer and a business owner, to help provide guidance and direction in these different measures, to provide starting point for you to develop your own strategies, because as we've said on many occasions and in all the webinars we've done, now is the time more than ever you need to have a strategy and to plan. So also we want to extend our arms to say, you know, how we can help and support you as your accountants, and then to offer clarity and focus and a chance to answer any specific questions that you may have. And again, once more, just feel free to ask the questions as they come up. So let's start then. What did the Chancellor's Winter Economy Plan involve? So last week, Chancellor Rishi Sunak announced his latest set of initiatives to help businesses and save jobs. And this is what he called his Winter Economy Plan. And it comprised the Job Support Scheme, an extension to the Self-Employed Income Support Scheme, various changes under VAT, and then there were a collection of different initiatives, of which we've called them all able to help cash flow. So let's go through and have a look at these in each one. Let's start by taking a look at the biggest of the announcements in the Winter Plan. So the new Job Support Scheme starts on the 1st of November, and it's there to replace the current job retention scheme, or as everybody has labelled it, the furlough scheme, because that comes to an end on the 31st of October. So in terms of eligibility, all small and medium-sized businesses are eligible. You don't have to prove that your turnover has fallen during the pandemic. It's only larger businesses that must do this. So that there is more eligibility criteria for larger companies. So we're looking at turnover above the £10 million mark. Generally our client base and the people on this webinar here today fall under what's categorized as small as medium-sized businesses. So you might be reading reports that you have to prove your eligibility. You don't for business. Employees can use the new scheme even if they've not previously used the furlough scheme. So again, when we came to post July, you were only able to use what was dubbed furlough 2 if you'd already used furlough 1. The slate is wiped clean now. It's a new eligibility scheme for this. It doesn't matter whether you've used furlough so far. Eligible employees must have been employed as at the 23rd of September. So what that means is you must have submitted what we call an RTI, but essentially a payslip for an employee on or before the 23rd of September. This is for existing employees as opposed to anybody who you might take on in the future. They won't be eligible for this scheme. And it's set to last for 6 months, but they've already announced that the minimum threshold of 33% of working hours, which I'll come on to a second, that's going to be reviewed again after the first 3 months. So employers will be allowed to cycle on and off the scheme, and you can vary your working patterns as long as each cycle lasts a minimum of 7 days. Okay, so let's have a look at the details of the scheme. So as I've already hinted, employees will need to be working a minimum of a third of their usual working hours. For the remaining hours not worked, the government and the employer will pay 1/3 each, so the employee effectively loses that last third of the amount of hours they do not work. The grant is based upon an employee's usual salary, and he's also capped at £697.92 each month. So that is the government contribution, this 1/3 of the amount of time that isn't worked by the employee. That's capped at just under £700 a month. It depends about how much the employee is paid as to whether that cap will come into play or not. What this all means is that the scheme will cost the employer at least 55% of the usual wage. Just a few more details. The grants will be made in arrears and will start from December. So wage payments before then must come out of your own cash reserves. And the grants also don't cover the employer NIC or pension contributions. So you need to factor those in as costs to the business as well. Now, at the moment, we don't believe you can opt to top up the wage salary voluntarily if accessing this grant. That's something that under the furlough scheme or job retention scheme, you've been allowed to do. But under this scheme, at the moment, as far as we can understand, it's not 100% clear, but as far as we can understand, there is no top-up facility that's available. And in terms of calculating usual hours, well, those calculations are going to work very similar to the way we've had to do it throughout the furlough scheme. But as of yet, as of today, full details haven't been announced. So if there's any updates to that, we will update you via one of our keeping in touch emails. But I think at the moment, for practical planning, for the basis of practical planning, you should start to work along the same lines as we've done throughout the last 6 months under the furlough scheme. Let's have a look at the breakdown of the figures then, and we just got this little graphic on the right. So if this full circle represents 100% of an employer's usual pay, then on the basis that we say they work the minimum time, which would be a third or 33%, this is how their pay would break down. So 33% as being the worked hours would be fully paid by the employer. And you can see that here. Then the top up needs to be paid, which is a third of the remaining, equaling 22% of the whole wage. That also needs to be paid by the employer. Altogether then, the employer is paying both of these two blue sections, which is where the 55% figure comes from. The grant comes in the form of this, which again is a third of the unworked proportion. And that's the bit there that's limited to the cap of just below £700 a month. And then this bit in green, that's the sacrifice of the employee themselves. So in this particular example, they're working a third of their usual hours. They're getting paid 77%, which is the addition of all these three sections, and sacrificing 23%. The employer, as I've already said, the employer covers this 55% here. So I hope that's quite a useful visual representation of the figures and how it breaks down, and as employees, what it's going to cost you to access this scheme and this grant. Okay, let's have a look and move on to the extensions to the self-employed income support scheme. So that's also going to be extended, and this too will be for the next 6 months, and that will run from November to April. So on the same basis as the job support scheme we've just been discussing. An initial taxable grant will be provided to those who are currently eligible for the SEISS and are continuing to actively trade but face reduced demand due to the virus. The first lump sum will cover the 3 months worth of profits for the period. That goes from November to the end of January. And this is worth 20% of the average monthly profits, up to a cap total of £1,875, and then an additional second grant, and they've already said that might be adjusted yet. They might make another announcement to adjust that to respond to changing circumstances, but that's going to go for the same individuals, and that will cover the period from February to the end of April. So there's 2 lump sums coming in there. Let's have a look at these changes to VAT then. So there are 2 noticeable changes within VAT. The first is industry specific, and it's quite straightforward really. It's an extension of something that's already been brought out for the hospitality and tourism sector, and that's to continue the 5% rate through to the end of March next year. And the second assistance is to do with cash flow by the introduction of a payment plan. So we're told up to 500,000 businesses took the option to defer their VAT bills last spring, as no doubt you will recall, and that gave them some breathing space. But the original plan was that would all have to be paid March of next year. But with the new payment scheme in place, it gives them the option to pay back in smaller instalments. So rather than paying a lump sum in full at the end of March next year, they will be able to make 11 smaller interest-free payments throughout the 21-22 financial year, and I think that will come as a significant breath of relief for a lot of business owners, because we're not out of this period yet, and so far all these VAT bills that have been deferred have simply been pushed back. So there's a payment plan in place to give more breathing space. Let's have a look at some of the other miscellaneous support that's come through in terms of cash flow. So approximately 11 million self-assessment taxpayers will be able to benefit from a separate additional 12-month extension from HMRC on the time to pay self-service facility. So what that means is you've already been able to defer the payments from July 2020, and those that are coming up in January 21, you don't now need to pay those until January 22. So again, that's a good breath of fresh air to some people. For the businesses who took out the bounce back loan, you'll get more repayment time as well through a new pay-as-you-grow flexible repayment system. So this includes extending the length of the loan from 6 years to 10, which will cut monthly repayments almost by half, and interest-only periods of up to 6 months, and payment holidays will also be available if you want them. So this could benefit up to, again, as we're told, 1 million businesses who went for the bounce back loan. Then similarly with the CBILS loan, the government also intends to give the Coronavirus Business Interruption Loan Scheme, or CBILS as it's known. They want to extend the length of those loans, and that can go from what was a maximum of 6 years up to 10 years as well. So again, that's extending that cash flow for the repayment of that loan. And finally, related to that as well, the Chancellor also announced at the same time that there would be an extension in the time frame in which you could apply for some of these loan schemes, and that's going to run till the end of November. So that window in which you can make your choice in case your cash flows are going to be insufficient, that's been extended a little bit longer as well. Okay, let's have a look at some of the other government initiatives that weren't involved in the winter plan. And there was really a big one. This came out, it was announced in July, but with no details, and a lot of the details only came out earlier this month. And this is the Kickstart Scheme. This is all about new employees, and particularly protecting the jobs of protecting the employment viability of young people. So whereas the job support scheme is about current employees and helping, or at least encouraging, employers to keep them in employment, this is about taking on new people. So let's have a look at some of the details of how you might be able to access the Kickstart Scheme. So this is a funded scheme to create work placements for 16 to 24-year-olds. So it's very much aimed at the government trying to make sure young people do not enter long-term unemployment. We're told that they're throwing £2 billion at this, so it's not a small scheme. This is a large-scale attempt to avoid this unemployment amongst young people. There is an unlimited number of placements you can take on, and there's seen to be 6 months in duration. Now, there is a large significant eligibility criteria here. It's not just any young person, it's a young person who has been on universal tax credits. Now, this wasn't mentioned initially, but the kicker came in September, where despite originally claiming that this was for all businesses large and small, the Chancellor then went on to announce that there would actually be a minimum of 30 placements per employer or group. Well, again, this webinar today is for small and medium-sized business owners. Certainly, I don't think there's anybody here who would be looking to take on 30 new employees at once. So it was a bit of a kicker when that additional eligibility was announced, but you can actually join part of a group. And I will come on to talk about these groups a little bit more, but anybody who is looking to take on a new person within the Kickstart scheme, you're more than likely going to have to do that via a group, which will be run by an intermediary. So the funding covers the national minimum wage for 25 hours a week. Now, most of you will know that the national minimum wage is tapered for the younger age groups, so it depends upon their actual age as to what that will be. You can pay them what you want in a new apprenticeship, but the national minimum wage for 25 hours a week for 6 months will be covered by the Kickstart scheme, and that will add up to quite a reasonable amount of funding, extending to thousands of pounds. The funding in this case will also cover all the employer's costs, so it will include any NI, any employer's NI, any pension contributions, and there's also a £1,500 bursary to provide training and set up for that person as well. So this scheme is very well accommodated for new apprentices starting. Funded placements should be available from November, but the application windows for these, they're already open. If this is something you're considering, you can start to make your applications now. And the scheme is expected to last right through 2021, and they've already hinted that it might be extended beyond that. I guess that will be a case of how much of the £2 billion funding has been used up. But the point is that they are 6-month placements. There's nothing to stop you in another 6 months taking on another placement as well. So let's have a look at some of the other initiatives. We've also got the job retention bonus. You'll probably recall this. Again, it was mentioned sometime, and the idea here is it relates back to the furlough scheme, to the job retention scheme, and it says that if any employers are able to bring back those furloughed staff and they still have a job by the end of January, then the government through the payroll system will issue that employer with a £1,000 bonus. And there is eligibility criteria. That person must have been paid at least £520 on average per month between November and January. So the idea is that you can't keep them on such a minimal wage just to qualify for the bonus. And it's worth noting that this bonus can be claimed completely irrespective of whether you're using the job support scheme as well. You could be receiving this bonus and the job support scheme at the same time. Time to pay arrangements, these have always been in place. We are led to believe, and we see from our experience with various clients, that HMRC are taking leniency at the moment. So this might cover payroll bills or corporation tax bills with HMRC. Now, there is no deferment system in place. You simply can't just not pay, but the arrangements to get these time to pay systems in place are much more lenient at the moment. So if you're checking your cash flow and you're really looking at where this might come, that could be one option available to you. Let's not forget that while all these other schemes are being announced. And also there is a series of local discretionary grants. Now these are very specific to whichever council you come in. I'm not sure that there's many, if any, nationwide ones, but these come under your local council, and there's various grants you can have, all kinds of funding pots that are available. It's very worth checking in with your local council to find out what you might be eligible for. So if that's a kind of outline of what support is available, let's start to have a look at, as business owners and employers, what we think that your key considerations might want to be. So the number one, and we're not going to stop saying this, you still need to be on top of and understand your forecasted cash flows. All these are potential solutions or remedies to issues in cash flow, but you need to know where your business is going like never before. Then you need to start to think, okay, well, now with sight of what my forecasted sales and my forecasted cash flows might be, can any of these government support initiatives be used, and are they any use to me? So can you help save jobs or provide new ones? So we looked at two schemes. The job support scheme is all centered around saving jobs, and the Kickstart scheme is all centered around providing new ones, obviously for younger people. So the job support scheme will help you save current jobs by reducing hours rather than forcing redundancies. The government has made no secret of this. The grants are made to employers, but they are there to protect the jobs of your employees. You need to be very careful. It's far less generous than the job retention scheme, and it's only intended to protect viable jobs. We showed you on one of the earlier slides that as an employer, you'll still be paying 55%, even if your staff are down to a third of their time. You can only afford to do that if that position is viable. And this scheme, this grant, is there to protect you. Otherwise, potentially choosing to make the employee redundant because you can't afford to keep them full time. So as employers, you're going to need to consider this viability very, very carefully. The Kickstart scheme will enable you to bring in new but possibly inexperienced staff in at little or no cost. So this is a fantastic scheme, particularly for the young people, and presumably that will benefit the economy at large. But does your business need them? You can't throw inexperienced people at problems you already have. So you need to have a plan for how these people are going to be integrated into your business. If you're looking at new revenue streams or ways you've adapted your business and you need additional staff to cover these new things, then that would seem to be a perfect place to start. But just consider, if you bring too many inexperienced people in, what that might do to the balance of your staff already. So, you know, it's funded initiatives, but you still have to apply very good business sense before you actually go and use it. In terms of listing the considerations, we've been talking about this for the last 6 months throughout the pandemic period. But have you managed to find ways to adapt your business? We did a webinar in August where we focus very closely on the different ways you might adapt your business, new services, new markets, etc. And have you appraised your business throughout this period and use this to set a plan going forward? You know, I've already said it once, and I'll make no apology. You need to plan now like you've never planned before. You need to assess where the business is at and where its viability is going forward. We still don't really have a handle on how long this period's going to last, and we need to protect our business. We start by protecting our business by keeping abreast of where we are in the situation, and obviously, as I've already said, that starts primarily with cash flow. Okay, so how might we be able to help? So first of all, we've talked about doing business appraisal plans before. We've tried to line up 3 different options which all come at different price points, so we can sit with you, as we've done with many clients by now, and help build their plan and help business owners plan to come through this period. We can give you some tools and then review that plan and give you some degree of expertise into whether that plan is going to be viable. And also we can give you, you know, we're not trying to necessarily profit from this. We can give you completely free resources, and we are happy to give those to you now so that you can build your own plan completely free of charge. Cash flow forecasting, there it is again. And again, we've got 2 options here. We can do that for you as your accountants and give you a real good insight into what your cash flows are likely to be. Or we can provide very simple template-based things, which we have plenty of clients using, and they then take ownership of this, but safe in the knowledge that at least it's been monitored and checked. And of course, they can call in with us and have the conversations if they think there's trouble ahead in their forecasts. Also, as ever, I want to just promote our Facebook group out, the Inspire Business Community Group. We've used that throughout this period, but we intend to use it a lot more going forward, and we'll be releasing a lot of our announcements through that. If you're a client of ours or not, you don't necessarily need to be a client. Please do come onto Facebook and join the Inspire Business Community Group, and that's going to be one of the key ways you can keep up with our updates and information. Monthly webinars. Okay, so we didn't do that many webinars before this period, and then we were suddenly thrown into it, and we found it's been very popular with clients, so we're going to keep that going. We want to try and provide clients with as much value as we can and information. We see that as part of our purpose, and we intend to do that monthly going forwards. Right at the end of today's webinar, I'm going to let you know the date of our next one and what that one's going to be all about. If you've heard anything in today's webinar that you need to discuss further, then we are more than happy to do that with you. We can have these client reviews, these phone or Zoom based meetings, and we can talk through your specific needs. This is not sales. This is not trying to charge you for things. This is supporting you as your accountants. And so there's a chance for a Q&A session, as we've already said, at the end of today. But if you want to have a little bit more of a detailed conversation, we are happy to do that. And I think I speak for Steve as well as myself. We'll do that directly, or with any member of our team as well. And then finally, we've already had conversations with clients about this, but I just wanted to make this announcement here as well. We as a company, Inspire, would be more than happy to put ourselves forward as one of these intermediaries for a group. If we have interest from enough clients such that we can form a group of 30 placements under the Kickstart scheme, we will do it. We will be happy to do it. But we need you to register your interest with us. At the moment, we've probably got clients who are giving us about half that number. I think it's about 15 or 16 where we've got logged interest from clients. There is a minimum. It is 30. We have other clients who are in this sector and are also considering setting this up, and there are other companies we're aware of as well. So if you do need or want to place somebody through the Kickstart scheme, then do contact us and we can help you. But first and foremost, we'll be looking to see whether, as I say, if there's enough interest from our own clients, we will go ahead and do it ourselves. Okay, so that brings me to the end of the content there, and I hope you've had an overview of all the information. Steve, do we have any questions logged?
Yes, we do, Steve. So, Kate, good morning. So, Kate asks, regarding the Kickstart scheme, what if you let go a member of staff and re-employ them under the scheme as they are 23 years old? Wow. Well, the scheme is basically designed to run through Job Centre Pluses. It also has to be basically a new job for somebody. So if you're going to get rid of somebody and then re-employ them under the Kickstart scheme, then no, Kate, that wouldn't work, unfortunately. I hope that answers your question. Steve, anything else to say on that?
No, I think that's absolutely right. I know that when interviewing for candidates to come through the scheme, they actually, as you've suggested, Steve, they have to be provided by the job centre in the first place. So, you know, and they have to have been claiming universal tax credit. So, you know, there would have needed to be some sort of time gap in between the two. Otherwise, they wouldn't have been eligible for the tax credits.
Okay, thanks, Steve. So, Richard, morning. Is the Chancellor maintaining his commitment to pay employers £1,000 for each returned furlough employee? Yes, as Steve mentioned. So that scheme is running from November through January. So at the end of January, provided that the employee is still in employment and earning a minimum of £520 a month, then yes, you're going to get the bonus in February. Will it still be paid if the employer takes up the new scheme? Yes, it will. Again, subject to the minimum 520 a month contribution. Christopher Poole, is it allowed to send a young new employee to FE College for training for part of the time for which they're being paid? Good question, Chris. I would say yes, but I don't have any specific information on that. But certainly, you know, if you're training an apprentice and who wants to put him through a part-time college course as well, that I would say is allowable. Steve, any thoughts?
Yeah, I think when we think about apprenticeships, it's always a combination between you know, work experience and further education college training as well. And also to sit in the middle of that, there is this £1,500 where you can put them through your own training as well aside from that. So I think the government, they're showing the commitment to getting young people into work and also to training them as well.
Absolutely, yeah. Alberto, buongiorno. Does the new job scheme covers directors? Good question. Yes, it does. Technically speaking, it certainly does. It would be proportionate as to the director's usual salary. However, my own feeling is that single member companies with one director may struggle because if a director is going back part-time, a director also has statutory duties to his, obviously, responsibilities to his shareholders. And if the company is operational, as opposed to being totally closed down because of COVID, then I think those statutory duties would pretty much spread over the, you know, the whole period, if you like, the whole week. So for a single director of the company to go back for, let's say, 3 days a week and then close the whole thing down for another 2, it doesn't really work practically. If there were 2 directors in the company and one could come back part-time, and I think that would be certainly eligible. But single directors, I think that would be risky, and I think HMRC would take a you know, a dim view of that, certainly. Good. So one more, I think, Ellie. And we've gone through this. I think Steve's gone through this, but it's worth reiterating. What do I need to do if I want to use the Kickstart scheme? clearly you won't have 30 placements. You need to go through another organisation. That organisation could be a trade organisation. It could be a local council if they're, if they're offering that service. Or, of course, it could be us. As I say, we put a Keeping in Touch out a couple of weeks ago. I think, actually, Steve, I think we've got about 17 now who want to use us as a presenting organisation for the scheme. We're more than happy to do that, but we need about another 13 to sign up to make us eligible as an organisation. Oh, we've got one more here as well, Steve. Read the new job support scheme. Can you provide or signpost to a calculator for employers to punch in projected actual working hours of staff to help with wages, portion of cash flow forecasting? Thanks for that, Erica. Yeah, good question. The short answer is yes, but not yet. We'll have access to some sort of spreadsheet. Our payroll department will have access to that. And if you'd like to get in touch with us, we'll make sure that once we have access, we'll let you have a copy. Okay, Steve, that's it. Thanks.
Excellent. Thank you very much. So I hope if you had a question, it was answered there. And as I've already said, we're more than happy to take questions outside of this. And if you need to speak in detail and specifics about your own business, then please know how to contact us. And just in case you don't, there is our email address at the bottom of the next slide. So info@bwp-inspire.co.uk. And I said I'd give you details of our next webinar. It is next Thursday. It's at 11 AM and it's all about knowing your numbers. So when we've put this together, the way I'm dubbing it is, it's everything you always wanted to ask your accountant, but we're afraid. Sorry, everything you wanted to know from your accountant, but we're afraid to ask. So it's about breaking down what all these financial statements are that we go through, how to try and influence them in your business, and just becoming a little bit more financially aware to hopefully make you a little bit more of an enabled business owner. You're very welcome to register for that webinar next week. Other than that, I'd just like to thank you for sparing your time. I know that everybody's busy, so thanks for giving us your time on behalf of me and Steve. Thank you very much, and we'll see you next week for the next one.
Thanks, everyone. Have a good day.